I'm excited to have Doug Ramshaw here today. He is from Minera Alamos. Minera Alamos is a very interesting company that's actually in production and they've generated revenue last year. They're mining gold, they're taking it out of the ground, and they are selling it. They're based out of Mexico. They have three main assets that they 100% own. And Doug, I'm very excited for this conversation because I think it's going to be interesting to talk about not just Minera, but what it means to be a producer in today's environment and how that's shaping the future of mining. One thing that I think a lot of people are starting to realize is we need minerals. We need the metals. We're seeing shortages. We're seeing different issues. Gold price is at all-time highs. We are heading into a bull market in the commodity space that is, in my opinion, long overdue. But Doug, I'm very curious because you guys are a company that's in production. You can afford somebody to pick up the phone, to do the podcast, to have the conversations, but your phone number is still on the website. And when I went to a conference and I met you, you were standing at the booth. So why is that? Why do you want to keep yourself so accessible?
Well, thanks to start with having me on, Daniel. I mean, we're fortunate in that when the company was formed, it was a merger of two. Corex Gold, I'd been parachuted in to kind of save it. And I was president and CEO of that company. And Darren Kernigan had Minera Alamos, and he was president and CEO. So I was the only person who came over from the Corex side. It made sense for Darren with his team in Mexico, he'd worked with all these years, to retain the CEO title. But we actually split the roles. He is the operator, the mine builder, focuses on that, and I focus on the capital market side of things. And that's one of the biggest reasons I'm always on doing these. But I also think it's really important to be accessible. I didn't know when I put it was kind of, is this a good idea or a bad idea when I put my cell phone number on the bottom of press releases? It was a great idea because the people that call, I've said this in other interviews, it helps you when you're speaking to people from an outside perspective looking in at your company. They often have perspectives you're not thinking about because you can get caught in your own corporate bubble. So actually having that engagement is very, very rewarding. The disappointment factor is how few people actually bother when they're given the opportunity to pick up the phone and call management directly, how few actually choose to do that. That could make for my working day to be busier and busier as a result, but again, those calls are great. And there's the one I'll always remember. There's a gentleman in Sacramento that on a Saturday night, I saw this number come up on my phone. It's like, I think I've got one here. And I pick up the phone. It was like 8 o'clock on a Saturday night. And Doug Ramshaw. And he was so flustered. He was like, I'm so sorry, Mr. Ramshaw, for interrupting your weekend. I'm shareholder. I just had a few questions. I was going to leave a voicemail. I said, listen, if I had a life and I was busy at that point in time, you would have been able to leave your voicemail. But I had time. I picked up the phone, and you've clearly got questions, and I'm more than happy to answer them. There's nothing better than that experience of being able to, and it will never change. Whether we're a 150 million market cap company or the billion-dollar company I want to build us into, I will still have the same degree of accessibility. Obviously, as we get bigger, it's probably going to be more leaving voicemails that I will respond to. But yeah, honestly, it's a great part of the job to have these conversations with shareholders and investors maybe considering investing.
Yeah, and I think it does give a good testament to how you guys run the company itself. Like, I mean, Mexico's had its ups and downs in terms of public perception. I am not mining in Mexico. I don't know if there have actually been ups and downs. That's one thing I'm curious about knowing from your side. But I think that it is a test that accessibility is really interesting. And I like to be able to just reach out to someone who's running a $150 million company and just say, hey, do you want to hop on this podcast and have a conversation and be able to have that connection there. So Mexico, people, for context, it's been going through a shift in its government. Some people have been pessimistic in saying that it's tricky to mine there. It could be the government could come in and take over the mines. What has your experience been in Mexico? They've been mining in Mexico for decades, centuries. What's your experience been?
I mean, our team's operated down there for 16 years under a number of different companies, ones which have been sold before, companies which have built multiple mines. And so we're very well versed in Mexico. That being said, the last couple of years in Mexico have been probably tougher than the previous 14 combined for our team. It has been difficult politically. If you were to believe all the headlines, Mexico's becoming Venezuela. But in reality, unfortunately, I think a lot of press tends to now, so many people derive their news from the internet that, you need to grab those, put those kind of clickbaity type headlines there where there's a lot more nuance behind these headlines than gets portrayed, and it spooked a lot of people. But to some extent, rightly so, because for the last couple of years, Mexico has been very challenging. There's barely been a positive headline that you could point to in Mexico. Now, I will revert to the mean, and Mexico has always been a good jurisdiction, and Canadian companies have invested a lot of money in Mexico, and the reality is the skills, the expertise, whilst there is a skilled labor force that understands mining in Mexico because of the incredibly long history of mining there. I mean, probably in modern day countries, Mexico stands near the top in terms of the multi-centuries of mining there. And whilst it's not the same percentage of overall countrywide GDP that mining once was, there are certain states, in the north of the country where over 20% of their GDP is still mining. So will Mexico revert to the mean and be this good jurisdiction which requires outside capital? And that's to the point on resource nationalizing. Mexico wants control of its lithium deposits, which are strange lithium deposits. They're clay hosted, and there's, lots of challenges with recovery from the lithium. In my 30 years in the business, I've seen talk of resource nationalism routinely. And yet, honestly, you could ask most people, like, how many examples have you actually seen where those headlines, which are very scary and ominous when you think about, read words like that, don't actually amount to anything. They make for great headlines. And it's the same with a lot of the headlines that have come up in this political year, election year. We see in any country, Mexico's no different than in an election year, there's a lot of stuff said that is positive for the electorate, or for, in the case of the Morena administration down there, keeping its coalition together, which involves a big Green Party component, that doesn't actually amount to much. We saw this back in 2019 with talk of changing the royalty structure, and it kind of withered on the vine. Made headlines and then just disappeared. And so there's been talk of open pit mining bans which make headlines, but even the new president, who inaugurated yesterday, her campaign platform did not refer to no permitting of open pit mines. It's nuanced, but it's been misunderstood and misread by a lot of people. And we've seen a lot of pressure on Mexican stocks over the last couple of years. Now, everyone's risk tolerance is different. So I'm sure that there are people that will come back into Mexican stocks when they start seeing a shift in positive direction of news and permit flow, permit amendments that have all got kind of held up over the last year and a half. And if you actually look at a lot of companies out there, much bigger companies than Minera, they are talking publicly in their press releases about receipt of permit amendments and the like before year end. In the case of Alamos Gold, I think Discovery Silver's CEO Tony McCucci at the Denver Gold Forum talked about, anticipating permit receipt for their big project in Chihuahua, which is an open pit, in Q1 of 2025. So I'm sure there are going to be a lot of people waiting, saying, okay, let's see some positive movement. And then there are smart people realizing that the headlines perhaps create an opportunity. And we certainly, a few Mexican stocks in the last month have started to see a rebounding as people realize that maybe the sky is not falling quite the way that headlines suggest. But it's definitely been a test of investor patience if they've been invested in Mexico in the last couple of years, for sure. I think that patience is set to be rewarded, and we should start over the coming months and the next quarter or two, start to see some positive permit-related news in Mexico, which will help dispel a lot of these headlines that we've seen in the last year and a half.
Yeah, I mean, to your point of patience, like I'm looking at your guys' stock, and you did recently have a jump up of about 30%. But if I look at the 5-year return on your company, it's about 77, 78%. which just goes to show that the short-term fluctuations go up and down, but it's the long term, the patience, that's what counts. But how do you go about managing your team and also the sentiment of the people who phoned you and you talk to in times of uncertainty? Even yourself, I mean, I'm sure you feel the pressure a little bit. What are your philosophies when it comes to managing these fluctuations?
I think, when people take the time to call, they have an opportunity to hear more nuance. Like, it's hard. In a press release, you can't exactly put out something, that contradicts some of these Bloomberg-like headlines, right? Like, I think a lot of people think permits have just been sitting in an inbox gathering dust and not actually moving forward. So in the last press release, as an example, we traditionally have stated that we are having constructive ongoing dialogue on the permitting front with the authorities down there. Eventually, if all you're saying is that, and people are looking at the headlines, they're going to look and go, either the headlines are wrong or what you're saying is maybe, wrong. And so, but what we're saying is correct. They are constructive conversations and dialogue as this permit moves across the desk. Is it in the outbox yet? No. But it's not gathering dust. So in the last one, we actually gave an example of the kinds of questions that we were getting from Sermonat, the Environmental Permitting Authority down there, which I think helped people understand that stuff is not stalled. Maybe it's moving slower than Mexico traditionally has been in terms of permitting timelines. It's been one of the quickest parts of the world to permit a new mine. Santana, our first one, was 14 months start to finish. But traditionally, it's about 12 months or so you can permit something. In Canada or the US, it can be 3-4 years or longer. But certainly you're talking multiple years there. So is Mexico going to be as quick as it was historically? Maybe not. But is it going to have permitting timelines similar to the US or Canada? No, I think it will still always be moving at a reasonable pace. So when someone takes the trouble to call up or email and you have a conversation, I think that investor, and this doesn't just go for Minera, this goes for any company. If an investor calls up and management A is engaging, if management doesn't get back to you, I think that's a bit of a red flag, personally. We get to do what we do for a living because of our shareholders supporting us at every AGM and and the like. So they are very important and should be treated as such. If that shareholder chooses to call a company, they're going to have a slight edge on the market in general. Not because they're hearing anything that they shouldn't be told, but there's much more background and nuance to what can go in a press release or whatever, or what we're hearing on the ground down there, the conferences in Colorado recently. It wasn't just what we were telling people, which could easily be a rose-colored glasses type look on Mexico, right? Well, of course you're going to say things positively. You need a positive shift in sentiment down there. We were hearing from our larger peer group companies down there exactly what we were hearing, and that it's kind of, when you're getting it from multiple sources, that's actually kind of important. So shareholders should, if they're thinking about a particular jurisdiction, they should be calling up a number of companies, ones that they're not invested in, maybe never wanting to invest in, because that's actually going to help guide them in terms of where they do have their investment parked. So all we can do is kind of consolidate what we're hearing on the ground, the news stories, add the definite nuance to a lot of these headlines, and provide as clear a picture as you can of the challenges a particular jurisdiction might be dealing with for a period of time. And of late, that's been very helpful for those people that have taken the time and trouble to maybe ask a little bit more about what does it mean if an open pit mining ban is advancing in the lower house of Congress in Mexico, which was the headline, but in fact it was just a bill coming out of committee stages that never even got voted on in the lower house during this 30-day period where AMLO was still in power and he had his new empowered Congress. But again, when that headline first came out, I know our stock took a beating that day. And so did, I think Minera and Discovery Silver are probably the bellwether stocks for the permitting environment in Mexico, because our stories are all kind of somewhat permit related right now. I remember when that headline came out, both companies, got hammered that day. We both subsequently recovered very nicely. Sometimes those headlines obviously from a company's perspective, you never want to see the stock fall, but I actually look at the people that sold on that day because of that one given headline that now, see the stock 30% higher or 25% higher. That's where, people that actually take the time don't necessarily react immediately, think about what sources they have for understanding what that headline is, can have an edge over someone that just tends to be reactionary in that regard.
That's really well said, because it's the people who actually take in the time to think. It sounds bad to say, but if you actually take in the time to think and look into the source and why this is being said and what it would mean on a larger basis, you can get an edge on the larger average population. I mean, investing is all about not going where everybody else is going. If you're doing the same thing as everybody else, you're selling when the rich people are buying, and you're buying when the rich people are selling. So you have to go a little bit against the tide, and the way that you do that is through proper research. It's interesting because you guys, what was your revenue last year? You guys generated...
We had a down year in gold production last year deliberately. We actually scaled back production last year. As of June of this year, we have a new mining operating plan in effect. So, our revenues on what we would expect to mine over the next 12 months is, $40-50 million. We're a modest producer that's more tied to big development projects that are in the permitting process right now. So yes, it's nice to get some early production going, because if you spend money in this business, there's only two ways you can replace that money. Either you have a business that generates cash, or you have to go to the market and dilute your shareholders in raising cash. We're very averse to the latter, and we've built a business plan around, generating our own capital. So last year, for a lot of reasons, all deliberate on our part, was about protecting the balance sheet, waiting for a permit amendment to come, and then reconfiguring the mining plan so that we could push forward without that permit amendment, as things clearly got bogged down in the elections. So, but I mean, I would call us a quasi-producer that's really a developer at heart. I mean, the next project that we are going to build that's in permitting right now is an absolute step change in our production profile. And not just our production profile, the cash generative consequences of having that mine up and running. The first mine, small, modest, $10 million build, was purely about getting to a point of generating cash where you don't mind taking on a little bit of debt to build project number 2. So it was a means to an end. I would hesitate to say that we're a genuine gold producer right now, even though we produce gold. I think the big value in our company is our secondary assets that are still in the permitting, or in case of one, it's permitted, but in the other, in the permitting process, because that will lead to us, instead of being a 15, 20, 25,000 ounce a year producer, cresting or getting real close to the 100,000 ounce production mark. That's where you become a much more material gold producer, especially with the kinds of cash generation that second project will lead to.
So you leveraged your first project to then build the second one. And you said you guys are looking at what kinds of revenues from?
Well, the next mine is on the base case, it's 60,000 ounces a year, and there's an upside case for permitting, which is about 80,000 ounces a year. So, at current, well, let's forget current gold price. It's nice, it's great, it's a boon to gold producers right now, but I think we should be building mines that work in a lower gold price environment. So let's just shave $600 off the gold price and say it in a $2,000 gold environment. That means we're going to be $160, $180 million of revenue company.
That's your market cap right now.
Yeah, a market cap equates to revenue, because I've seen lots of companies that you kind of spot them because in their quarterly reports, the headline is how much revenue they've made in a quarter. And typically, if you look at a company and they're boasting about the revenue they made in a quarter, they've lost money that quarter. No, it's true. So revenue is nice. It shows that you've got a relevant scale of operation, but ultimately, if it's not making money, that's not actually as important a metric as the bottom line. And I think what's really important in a business, which is seen as so cyclical, and why a lot of generalist investors stay away, is you need to ensure that your project that does well in good times also still achieves bottom line profitability in worse gold markets. So that's
Yeah.
why even with the rising gold price, anything I'm looking at or existing projects, anything new, you want to stress test it because you're kind of trying to break that stereotype that gold sector is cyclical. Big producers are having a great year this year. It took record high gold prices to be able to do that. And the problem is in the previous years, the sector was suffering. We should be building projects that do well in every year.
Yeah.
It's not always easy, but that's certainly our goal here is to kind of break this narrative that there's a cyclical nature to this sector. It doesn't have to be that way. And I think our small, flexible approach to these low capital projects can give us a real edge against kind of the cyclical narrative of gold. And also, I think, make the story more appealing to generalists who really don't care if your gold is hosted within a hydrothermal breccia pipe because they don't understand what that is. They want to know how much gold you've got there, and they want to know how much you're going to produce and how much money it's going to make at various gold prices. So I hope within a few years we're never going to be the biggest gold company, and that doesn't bother me. What I want to do is show, look, here are the majors, and this is the free cash they generate per ounce of production. And here are the intermediate gold producers, and here is the free cash they generate per ounce of production. And here's Minera, and this is the free cash we generate per ounce of production. Producing a lot less than those companies, but on a per ounce basis, more profitable. To me, that bar is what can appeal to a generalist because they're going to look at that and go, okay, so in a poorer gold market where these companies' margins are shrinking, Minera should still be able to achieve some really nice year-on-year growth and have the capital to redeploy back into the business to grow organically. A lot of how I look at the company is actually because I've had great conversations with generalist investors that have honed how I present a mining story away from talking about it kind of in the traditional way you would talk to resource funds or whatever. I prefer generalist investors. They have a longer term perspective to them. Gold or precious metals or whatever commodity is a smaller part of their portfolio. The specialty resource funds, they're all mining. So if they're dealing with they have to sell mining stocks. Generalists, some of our biggest shareholders are generalists, and they've never sold a share. In fact, they've added over the years, and it's hard in a sector where people have the attention span of a goldfish that want immediacy. Or having generalist investors, it can give you, whether it's a 2-year or 5-year or 10-year timeline on their investment, that gives you the time to actually deliver on what is a 2 and 5 and 10-year growth plan for a company. And so, yeah, I tend to hone things that way now.
That's so. What do you see going into the future of the mining industry? Because I think that it's almost a cliche to say mining is cyclical. Everybody views it as a very cyclical business, and that's because commodity prices move up and down. But like you said, you don't have to build a cyclical mining company. You can build a company in which, whether the commodity fluctuates up or down, you're still succeeding and you're still growing relative to your previous years. So do you see that as being a trend in where mining is going to continue to go in the future as a whole? Or do you think it's going to continue to be an anomaly for companies like Minera to focus on moving away from the cyclical nature of the industry?
I think part of the problem with the cyclical nature, the big companies have had their heyday of growth, and the Barracks and Newmonts, the world that are seen as kind of the poster child for generalists investing in gold miners. I mean, they had their day, and that day was 10, 20 years ago. I think this is I believe it was John Hathaway that gave a presentation early this year where he said this is more the market for the intermediates and below. And I think where the bigger companies can really only grow through and growth in value at that's commensurate with the growth in their share capitalization increasing at the same time doesn't necessarily lead to returns for shareholders. The company's got bigger, but if it's as a result of the share count swelling, the share price itself can stagnate. You look at someone like John McCluskey at Alamos Gold, I think he's a poster child for why you invest in gold miners over gold. And really, up until this year, there was a very strong argument that if you wanted an inflationary hedge or a geopolitical hedge in your portfolio, you were better off owning gold than gold miners. The nature of the last 3 years downdraft. This year's changed that narrative, and you're seeing the equity performance come through. But it's taken record high gold prices to deliver that. I think if you look at a company like Alamos Gold, I gave a presentation in February, so the data is a little out of date, but I looked at the 5-year period up to February of 2024, and Alamos Gold was up 300% at a time where gold was up 75%. It had fourfold leverage over owning gold as a metal. Yeah, gold served you very well, but I think where money is best served is companies that can still grow organically. Growth out of M&A and the dilution that comes with that is not necessarily shareholder friendly. Growth through very smart, strategic M&A that Alamos delivered on has led to great outperformance, but it's easier to deliver the kind of M&A and deals that allow a company to do accretive transactions and still have kind of organic growth built into their business model when they're smaller companies. So Minera maybe has this benefit of the bar is so low in terms of our valuation that there's a tremendous amount of things we can do which I would view as accretive to the growth of our business model. It would be much harder for a Barrick or a Newmont, and this isn't a knock on them, but more a knock on this size of their company now. You can't deliver that same growth the same way a smaller company can. And so I think the intermediate gold producers and down are where investors should be looking, rather than the biggest companies where I think as investors we want to be able to see the organic value creation in the companies we invest in rather than growth through growth sake or just becoming bigger, but as I say, not necessarily in the most shareholder friendly manner. We shouldn't need record high gold prices to deliver value proposition for our shareholders. And Alamos Gold is a good example of its growth was there, well in advance of this major move in gold this year through smart decisions that were very shareholder friendly in terms of the growth, and just starting from that lower valuation point of view, I think presents better opportunities.
Yeah, I mean, I'm looking at it. I pulled up their chart, and from March 13th, 2020 to currently, it's up 400%. So, and like you said, like you can see the growth happening in 2022, 2023, 2024, and then it got a nice, upkick as gold prices went up, but it was still continuing to grow regardless of how gold prices were performing, and that's because it's a company. Company grows based on more metrics than just the commodity price, you would hope.
And it was a company brave enough to do deals where I know deals it did were pillared by the market at the time, and they were right. The Richmont transaction is a good example. Market didn't like it. It was a fantastic deal for them. Calibre is another good example. Calibre Mining, I mean, when they announced the takeover of Marathon Gold, I admire a management team that understands anytime there's a takeover and there's any kind of premium, there's a day one settler, on the stock as a technical arbitrage. It's not a reflection on the transaction or, they've overpaid or whatever, but if that premium's there, it can be a technical arbitrage on the stock. And management of Calibre knew when they announced that deal that their day one, their week one, their month one settle were all going to be lower than where their stock price was trading at when they announced that deal. But good management teams are looking at deals where, they can see the irrelevance of that in the short term and are looking and saying, 6 months from now, are we a better company? Is our stock going to be better? 9 months, 12 months from now? And that was precisely what happened with Caliber. The 6 months, after that deal closed, their stock was up higher than when they announced the price, and they've gone on to great things, and they're now into the GDX, and they raised another $100 million. I mean, I bought it. I'd been watching it for years, actually, and because a good friend of mine works there. And I remember, I think it was $1.46 where they met the market cap threshold for GDX inclusion. So I bought it $1.46. Sure enough, it went into the GDX. They raised money. They've done this deal to scale up the company and also blend its jurisdictional risk. And it's probably up 60 or 70% since then. That management team knew the market would sell down on that news because it's just what happens on M&A. Good teams put that into the back of their mind and know that, there's conviction, this deal makes sense, and we will be rewarded for it, and our shareholders will be rewarded for it. And again, having long-term patient shareholders that get it and are bought into the management's vision and execution is going to, mean that they can accept that there's going to be a short-term period of weakness after an M&A deal, but then the value creation comes. Alamos Gold done that in spades numerous times. In fact, the last deal that they did when they bought the Magino asset out of Argonaut Gold, I think Alamos Gold's stock was up 6% that day. It was that good of a deal for them. But it's very, very rare that you see an acquirer's stock go up on a transaction. That's how good that Magino deal was for Alamos Gold, and good for them. They picked their timing on it just about perfectly. And it's why the market has liked them before a gold price move. They've made smart decisions. You build trust with the market and you get rewarded for that. And, it makes the next transaction actually, more accretive because you've got a premium than if you're a management team that's perhaps in the market doghouse to some extent.
Yeah, and it's interesting that you put it that way because it is really an exercise of building trust over a period of time, and that comes through proper decisions. And, I think the industry as a whole is moving in an interesting direction because I think that more and more people are starting to realize that we had this phase of ZIRP, zero interest rate policy, that kind of created a lot of irrationality, and even honestly in years leading up to it, where people were focused on building companies to flip. Build a small company. You had mine failures like Pure Gold because they were expecting to sell the company, and it leads to poor decisions and poor execution. Now I think that it's shifting to, okay, we need to build real companies. There are structural shortages, there are structural issues in the mining sector, and we need to actually build real companies to solve that. Do you think that, do you feel like that's rippling down into the junior sector, or do you still feel like this is something that's more so sitting with the developers?
For the sheer quantity of companies we have, so few are sold that it's a fool that has a business plan that is purely about hoping someone buys. You have to have a business plan that provides a certain amount of self-determination in things. Hey, if someone comes along and wants to buy you, that's one thing. But that can't be your end game. Even on the exploration side, for all the exploration stories out there, it's a handful, that get bought every year. And yet we have hundreds, more than 1,000 of these companies, right, all chasing that unicorn. So, and if you're not lucky, then that's why a lot of those projects end up in the development cycle, because no one would buy them in their discovery phase. It's like, God, I guess we're going to go through all these studies now. And then a lot of those projects just go cycle to cycle because there's a reason they get stuck in the developer cycle. They weren't good enough to be bought, on their discovery potential. And so then you get retreads of them and renames and rebrands, and they kind of forever bounce development cycle to development cycle. So I think the consolidation we have seen in the space over the last 20, 30 years has meant there are fewer and fewer companies that actually are going to be the active buyers of these assets. Mm-hmm. So we need to see more, companies actually wanting to build and build. And I think there's a great opportunity to, for consolidation at the lower end of the sector. of some of these assets and building new intermediates out of those. It's how today's intermediates once were themselves. There should be now. Building mines comes with its own challenges. Like on exploration, the challenge is not drilling a whole bunch of dusters. On mining, you're fraught with, changes in geopolitics and jurisdictional risk, permitting, even startup of operations. They typically never go quite as smoothly as you want. And then even ones which get through all that can still be hit with problems. And, the poor, folks associated with Victoria Gold is a good example, but even SSR with Coppola, like we've had, unfortunately, a number of these examples this year of the perils that can still beset a mining company has actually got through all that thing. And so the couple of lessons from that to learn is very quick, a company de-risks. There's two very easy steps to start de-risking a company's profile. One is to be a multi-mine company. SSR, that had a tragedy happen before them and their employees at Coppola in Turkey. I mean, it crushed their stock, but they didn't die off the back of that because they were a multi-asset company. Victoria Gold, unfortunately, a single asset with a whole bunch of debt, where their problems, it was going to wipe out the equity shareholders. It doesn't mean you get too aggressive too quickly to add that de-risking component, but there will be a natural point. I'm sure there are a lot of single asset producers right now that are and have been thinking, even before those incidents, about, being multi-mine, and typically with that second mine, you could add the second jurisdiction to give you the other de-risking step, which is to be multi-jurisdiction. And you still want to be somewhat limited in that regard. You don't want to be in 6 different countries with 6 different mines, and there should be some focus, but
some cohesion.
So I think there have been some very important lessons this year in the perils on the mining side. That said, we still need more people to actually want to go down that path and look to build. And then that comes back to another issue we have in our sector, which there's not a lot of. We're lucky in Mexico. There's a very a storied history and legacy of mining in Mexico, and with that comes a tremendous amount of mining expertise down there. I think we as an industry need to be doing more to help bring people through in the educational system that are going to be the new, miners of decades to come, because we have a skills shortage. The challenges, I think, that used to historically beset the industry, you'd argue, water management, permitting, they're global issues, but I think you could add skilled labor shortages onto that, which are going to make it more challenging for new companies to build. And putting gold aside right now, because I think if every gold mine shut down tomorrow, the vast majority of the world wouldn't care. Your local stakeholders that have the benefits that come from that mining would care, your shareholders would care, but the world as we know it wouldn't. Every copper mine shuts down tomorrow, the world would care. And we need, to your earlier point, we need to see a lot of advancement in metal production for a whole array of metals. Maybe not gold as much, but a whole array of metals to actually help with technological advances, and that can help society, can help climate change and the like. But that all comes from our acceptance of some holes in the ground and acceptance that we've got to have the right skills to deliver those holes, and you've got to have a permitting environment that doesn't stop and delay these things to such an extent that big companies wanting to develop big mines are concerned that by the time they actually get to do it, CapEx numbers have gone through the roof. So it's a real challenge for our sector, because we can disrupt mining, with electrical fleets and a lot of automated stuff. But the large, especially let's look at copper, the large amount of copper we need is going to come from large holes in the ground. And for people that want to fight against mining, I think it's cutting off their nose to spite their face, because the very mines that we can develop that have a very small footprint, like relative terms to city sprawl where we don't mind asphalting over agricultural land or desert in Phoenix or whatever. That doesn't ever seem to have the same pushback as mines. And maybe we've had some mining disasters over the years for sure, and that's always terrible to see. When legacy projects or new projects, there are too many. But the reality is, that maybe the industry needs to do a better job in portraying itself as a better steward of the environment that it needs to operate in to deliver things that can help that very environment.
Well, it's funny because I think mining has fallen into this cycle. There's this saying I love, and it's about life and it's about families, and it says, "Weak men create hard times. Hard times create strong men create easy times, and easy times create weak men." So there's this cycle where things get really hard, so people work hard to fix it. They then fix it, and things get easy. And at a certain point, you hit the peak of that cycle where things are really easy. So, you have a lot of mining companies. There's a lot of capital in the space. You can just sell any old exploration, right? And so you get to that peak, and then you start creating your own demise, where you start creating a pattern of poor decisions, which then lead back into a hard time. And I feel like in mining, commodities aside, cyclical nature aside, and I think this happens in every industry, and we're starting to see it in tech as well, where you have difficulties in the beginning that create great companies because they have to overcome those challenges. And then people start taking advantage of the excess capital and opportunity, and you start going back. And so now mining's in this point where we've kind of, I think we've very nearly bottomed out and we're on the upward trajectory. But I think that there's been a lot of these hard times that have been created, like you said, from poor decisions and poor management styles and other such factors where people just did not think about the longevity of the company and the longevity of the space.
I don't mind that, to be honest, because what we saw in May to September 2020, I think can be the worst for the sector. That was a rising tide lifts all boats type market. That's not a healthy sector. I mean, the reality is there's probably 15% of companies that should benefit, more wholly in a good environment, and 85 that still are in that work hard part of your curve. So, it's. I don't think we have a healthy market when there's a lot of excess that's few, because it's very short-lived. I remember doing a tweet in the fall of 2020 because I saw companies finally that after multiple years had been struggling, raising some cash, some companies raising $5 and $10 million. And I think my PSA on Twitter was, to those executives that just, fortunately been able to raise a bunch of money, remember how you treated your last $1 million, before that raise. You made things, you're kind of on fumes if you're below $1 million. You made things last because you realized that was the only capital you had. If you treat your newfound injection of capital the same way, you've got far more runway than suddenly in that kind of bubbly market, I saw companies then throwing out a whole bunch of money on marketing and this and that and whatever, but that didn't seem to tie to any particular purpose. Other than they had some money now and do it. As a result, I could go back and I could think of the companies that were making me think about writing that tweet, which I did. And I would say probably virtually all of those. And now looking back thinking, if we just husbanded that treasury better back then, we wouldn't be where we're at now.
Yeah.
Excess in our sector breeds the very complacency that then plays to your story arc there, and it's not healthy, and it's not healthy for investors and we get these 4 or 5 month kind of bubbly markets, and some people benefit greatly out of that, but we all know that at the end of the day there are a whole bunch of people, when that stock has topped out and is about to start its downtrend, all those people had not been benefited from it at all. So I actually liked the second half of 2019 was a very healthy market for some companies. And we were having a good time, but I can think of a whole bunch of companies where it was like the bulk of capital was flowing to 10 to 15% of the companies. That's a healthy market. when 8 months later, a rising tide lifts all boats and everyone's doing well. That's not healthy. We actually should, and I think for investors, it's easier to screen things when you're seeing a challenging market environment and good teams delivering within it. I think markets that breed excess are not necessarily that helpful. They're always short-lived.
Yeah, and you see it in everything. There was the tech VC cycle that recently burst about a year ago or so, where they had all these ridiculous valuations and everybody had to do down rounds and they lost billions of dollars even before they're public. So it's a very common trend, but if you're able to keep your head about you when you see these things, it creates a lot of great opportunities. And before we wrap up, I would love to know, when you look at the future of Minera, when you look at the future of your life related to Minera, what do you see being the priority for you guys to focus on in terms of your philosophy going forward over the next 2 years?
Well, we got to focus on execution. It was something we really used to pride ourselves on. The pandemic came along, and then other factors, including Mexican politics and a drought. It's like I used to have a slide in my deck. Seems like an eternity ago now, probably 2020-ish. Which was almost like a promises made, promises kept slide. Like there were six things there, and they were all check marks, and it was all either ahead of schedule or on schedule, every single one. And we need to get back to that, which we've been starting to do over the last 8 months. It's hard because during that period of both political and global uncertainty, people want timelines still, but they're best guesstimates where you don't have the same control that you would in normal times. But they crave timelines. You provide them based on the best information you have at hand at that point, and they slip. Minera used to have a very good track record at that, and we need to restore that. And I think this year we've been starting to do that. I've seen people that have commented, yes, it's still frustrating that the stock might be a laggard to the sector, but you know what? They are doing what they said they were going to do this year. And I think that's all you can do as a company. The best marketing you can ever do is just to execute and deliver on your own assets. And if you can do that, the market takes care of itself. In terms of the real focus, it feels so close, I can taste it, but we're not there yet. We get Cerro de Oro permitted. The Minera of the future is just such a bright looking vehicle. It will reward the patience of our shareholders. We don't even need to be first in line to get our permits. As people start realizing things in Mexico are not as bleak, there's 4 or 5 different companies that could be putting out permit-related news where we will get a lift from that, because I think that's how gloomy it's been the last couple of years. And honestly, Cerro de Oro for me, it's a game-changing project for us. It's never ever been a question of if it gets permitted, it's a question of when. It's a mine that has tremendous local support, state support. It's, everything about it it's one of those mines where, do we need every gold mine? No. It's one of those new mines that I think is going to be so beneficial to the local people there, and obviously our shareholders and federal government tax receipts. There shouldn't be any reason why it isn't permitted and built. And with that, my mind's already turning to what's the next iteration of Minera, because we've been very good stewards of our capital, and honestly, the biggest challenge if Cerro de Oro is built the way we presented in and even the upside case, but even just the PEA case, our biggest challenge is how can you deploy that kind of capital efficiently, with it rolling in, even in a $2,000 gold environment. So already turning my mind to what would be that iteration of growth? Where can we reinvest that capital to fuel this organic growth, which is where I think companies like us and the intermediates and down offer the better opportunities in the space than the somewhat archaic super large caps in the space that can't deliver that kind of growth. A job to complete here at Minera. Obviously, we've talked before, I'm a very big shareholder of it. I'm aligned with our shareholders. It's why I'm very averse to dilution, unless I view dilution as accretive to the business model. Share issuances aren't, people view them as diluted, but depending on what asset or what you're doing with that thing, it can be very accretive. It's not necessarily a bad word, but certainly when you are properly aligned with share ownership, you are very cautious about how you approach potential dilution as we are, and yeah, I said off the top, I want to grow this into $1 billion plus gold producer, and I think we have the path to be able to deliver on that. That's probably going to be a good time, Daniel, for me to hang them up, but that's not anytime soon, which is good because I love this sector and I love the conversations we can have about this sector and the space. And despite the lack of hair on my head, I'm a relative youngster in this industry still at 53, and so I've still got plenty of years ahead of me to deliver on that business plan. So hopefully we'll chat again as the years go by, and we can reframe some of these thoughts on the sector as it's gone off in a completely different direction. But yeah, it's been very enjoyable chatting today.
Yeah, likewise. Thank you. I love two things that you brought up. I love the vision for the billion-dollar future of the company. I think you have to have that big picture vision and you have to have something to strive towards. And I think it's something that with the smaller problem that you identified as well, and taking responsibility of that, which is executing on your promises and executing on the timelines that you've given, extrapolating that out, there's nowhere you cannot go. So I appreciate the transparency. I think this was a really interesting conversation just for me and especially for our viewers. And it was a pleasure to catch up, Doug. Thank you so much for your time.
Thanks for having me on, Daniel. Appreciate it.